This is one of the most reliable indicators that's been crushing markets for decades. In this video, we're discussing the simple moving average and how you can use this powerful tool to help cut through the noise and make smarter trading decisions. By the end of this video, you'll learn how to use moving averages effectively, how to recognize its signal, and how to apply moving averages into your trading strategy. Let's get into it. Moving averages are a way to analyze data by averaging specific sets of numbers over a chosen time period. The two most common moving averages are the SMA, or simple moving average, and the EMA, exponential moving average. In this video, we'll focus on the SMA. The simple moving average is calculated by adding up the closing prices of a stock over a specific time frame, and then dividing by the number of periods. For example, a 10-day SMA takes the average of the last 10 days closing prices.
Let's take a look at a chart of Apple. You'll see the 50-day simple moving average plotted as a blue line. Notice how it smooths out the price fluctuation. In contrast, the exponential, or EMA, plotted on this chart in red, reacts more quickly to price changes. And here's why both matter. While the SMA provides a longer-term view, the EMA is ideal for short-term trading. The most common use for these indicators for day trading is as a trend identifier. As traders, we can use both the prices themselves. Is the stock trading above or below the price indicated? Along with the steepness of the angle of the indicator, as one of the most reliable ways to identify if price is trending or consolidating.
For more strategies, check out our video on RSI and how it can complement your moving average strategy.
Now, let's put this into action. It's my favorite setup. It's trading using the 50-period simple moving average. You see this pink line? This is our key indicator. This 50-period simple moving average is on a 1-minute chart of Google. Starting right here at 1 o'clock, we are above the 200-period moving average and above VWAP. So what do? We use the 50-period SMA as an indicator of strength, trend, and buying the dips. At 2 p.m., we get a bullish signal. We take that long with support from, you guessed it, the 50-period simple moving average. We use the pink line as a trend indicator. If it drops below the 50-period SMA, we set up a stop loss to minimize risk and get ready to get out of the position. Now remember, moving averages help you identify trends and make more informed decisions based on price action.
Try using moving averages in your next trading session and share your experiences in the comments. Share this video if you found it helpful, and make sure to hit the subscribe button and turn on notifications for more trading tips.